Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of June 10th, 2024. We're going to talk about where we are in the market with the S&P 500 year to date and where we're going. We're going to talk about the different sectors and how they've performed and what they look like going forward. We're going to touch on some of the economic data, and then we're going to jump into the trades on the option trading platform. Guys, before we get started, if you appreciate the time and effort that goes into making these videos, then if you can hit the like and subscribe button down below, I really appreciate it. So thank you very much. I think it's super important that we understand all the rules and strategies that the rich are using to get richer. Then we can use those same tools and strategies to profit safely in any market. Be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a paid course if you want to dig into the options deeper. Use the link below and open an account with Moomoo. You can get 1.5% cash back or free fractional shares of stock for opening an account with just a $100 deposit. Open with $1,000 and you get more benefits. Moomoo is a zero commission brokerage platform and the free charting software is outstanding. I use it myself every day. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, we started the S&P in the S&P 500 at 47.43 for the year. So right now we are up at the this is the SPX. We're up at 53.46. You can see right here. So last week we started the week at 52.77. So we're up about 1.3% for the year and 11.4% year to date. So we're up big. The PE ratios are about 20.7 now, the PE ratio for the S&P 500, and the 10-year average is 17.8, so it's a bit higher. Last week with this week. Okay, if we look here at MarketWatch, last week we had unemployment numbers on Friday that came out, and you can see here 272,000 jobs, 190,000 were expected, so a big jump in jobs. Actually, there's an article right here that kind of covers it, but 272 jobs in May, unemployment at 4%. So what that really means for the economy, with those big jobs coming in, higher for longer again with the Fed interest rate cuts. So if you look here, it's moved out from September. September was where they were expecting the next rate cut, but now we're at 5.25 to 5.5. There's a better chance of staying there in September versus moving down a quarter point. It's not until November, and it's only, well, it's 47% chance of a rate cut in November. So we're looking at the end of the year now for a rate cut. And next week with the economic data, let's look at what we've got coming out which is this week, starting the Monday the 10th. Actually, nothing on Monday. Tuesday, not too much. The big ones are Wednesday, core CPI expected 0.3 and 3.5% year over year, and that comes out 8:30 in the morning. And then Thursday, we've got core PPI and core PPI year over year. So that's going to be big news. Watch for movement in the market on Wednesday and Thursday of next week. And then if we look at the different sectors year to date, everything's getting in the way over here. Well, I'm getting in the way, it looks like. Well, you can see the numbers here. Just let's look at the 5-day first. So last week we had energy down pretty big, materials were down, utilities were down 3.84%, and then we had healthcare up 1.9%, technology up big 2.59%. And then if we look year to date, we've still got everything up because we're up 11% year to date, all except consumer discretionary and real estate down here. But tech's up big, financials. Then if we move into the earnings reports year to date, Q1 5.9%. This talks again about that 12-month PE at 20.7. So uh, let's jump right into the uh, trades that we have on the platform. The first one, we've got Airbnb, and I like Airbnb up to 160, 170 target. If we look at year to date, it's down. Well, this is 1 year, going back 1 year. But you can see it was up at this 170 range, but now it's down at 146. Um, I rolled to July, uh, closed out closed out June and rolled to July right here and collected 10 cents. So um, up just a little overall. But we need, if you look at the curve mode here on the Tasty Trade platform, I just need it to stay, above 142 and a half. We're above that now. So we're in the profit zone. And then we collect the extrinsic value, which is this $464 because I've got two tranches of put credit spreads on the 145, 135, $10 wide, and then the $5 wide. So I like Airbnb going forward. AMD is I like AMD up to 180 to 200, and it's been down recently. Now it's starting to level off. I think it's gonna. You've got the 13 crossing the 50-day moving average. I think we're going to continue to move up in AMD. The AI stocks have kind of gotten beaten up. And again, we're profitable all the way down to 157. We're at 167 right now in AMD. So I really like that. I rolled to July and collected 475 over the last 30 days, but I rolled to July and collected another $1.81. And since that's, each contract controls 100 shares of stocks, that's $181. So you just, move the decimal over twice. But we've done pretty well in AMD, and I still see it going higher. Amazon, they're the king in retail sales, and they're big in AI. They're doing everything, groceries now, but I like them above. Definitely, I've got the 180, 170, $10 wide credit spread, so we're profitable all the way down to 176. And Amazon, I've got a target of 225. It's at 185, so I continue to see it moving up. And the way I get these targets, I mean, I kind of just look at the long-term slope and kind of average out where it's going. And some of these great stocks are down right now. So I rolled to July and collected more money just recently. Yeah, I rolled for a penny, so I didn't collect a lot, but hey, we're positive. Made 173 in the last 30 days, and we just extended it. I didn't want to get a sign; it was down, but now it's moved up a little, so it's up to 184. It was at 180 or 176 just last week. DraftKings is the next one. DraftKings had a drop down to 36 just recently. Yeah, they had a big drop. They were trending up, more competition. Actually, what came out was Illinois, the state, came out with big taxes. And I guess the states can do this and just increase taxes for online gambling and gaming stocks. I've got a poor man's covered call on, so a deep in the money call option that I bought, and then I sold 41 call against it, and you can see last 30 days 317. We've made over 3,000, yeah, 3,008 in the last year just in DraftKings, just trading this poor man's covered call. I've got videos on poor man's covered call. Let me know in the comments down below. Ask any questions if you want to see something specific on poor man's covered calls. I think now's a great time for it. Um, and also that relates to leaps options because the 30 call, deep in the money call, is a leaps option. GDXJ is the gold miners, and gold has been down. Actually, saw an article on the gold. I'll share with you right here. Gold slides 3% on double blow of strong jobs. So that jobs report that we talked about basically says that interest rates higher for longer, um, and gold dropped, and then the China data as far as buying less gold as well affected the market. But we're still within that range, the profit range. We're at close to 42. I'm profitable all the way down to 40. And then we would collect. We're still in June, 12 days left, and we've got $64. So I'll roll that out, not a huge amount. And I'm trading gold because of the high IVR. You can collect more premium. Here's the other one. This is the other gold I have, GLD 66. It's wow, 211, so it dropped, yeah, quite a bit just last week, but we're still in the profit range. So even where we stand, oh, I rolled to July and collected more premium, and I left the 215, 205 on, but yeah, yeah, we're down a little bit because of the drop in gold, but I'm pretty sure it's going to drop, move back up. Here's the drop last week down to 211. Google, I love long. I've still got a 50, 170, 180, 185 iron condor. So kind of a broken wing. So it's got the bigger put side. And then you can see here the profit range. We're in the profit zone right now, but I like Google. They're dominant. I think my target's over 200. Yeah, it's like 200 is my target. We're at 174. I think it still has time to move. Just in the last 30 days, I think, yeah, $992 just in the last 30 days. We've still got 509 left to collect. I've got June on, and then in July, because of the recent drop, well, actually, no, it doesn't look like drop, but I've just got the put spread on at 175, 165 for July. But I'm going to let this run, see if I can collect a little bit more premium, but I'll probably close next week on the Junes. L3 Harris, I've already got this trade in to close for 30 bucks. We've made 350 on this trade. We've done really well in L3, you know, 1,700 bucks over the last year. And we're basically doing iron condors in L3. NVIDIA, long 1040. You can see where we're profitable as long as the stock moves up. They're having a stock split is coming, and I think that will make it more affordable. The price to earnings to growth, the PEG ratio, is still, you know, fair. It seems fairly priced for their performance. They've got unbelievable numbers, and they reported beat on the top and bottom line on the 22nd of May. Um, so I am just long now. I'm rolled out to July, but just in the last 30 days, I think we've done pretty well. Yeah, 361 in the last 30 days. Palantir, that hasn't moved a lot lately. 23 low IV rank. I've got the poor man's covered call on in Palantir. I've got it moving a little bit higher, target of 25. And we've just done okay. It hasn't moved like I wanted. 116 in 30 days and 538 in 6 months. Yeah, I'm waiting for that to move up, but it's been kind of, actually you've got a a triangle here, so it may be, I think, looking to break out and make another move up. Um, but wow, yeah. So I've just got the poor man's covered call on with a 23. So I'm gonna need to. Well, it's in July. I might look at taking that off or moving it up. SoFi, yikes. I don't know why SoFi is not moving up. I gotta do some more research on that, but I like SoFi going forward. It's just been down for quite a while. They're profitable. Have been great. My target's a lot higher, but I've got, you know, a bunch of leaps options, 13 leaps option contracts. So as it moves up, uh, we make money, but I need it to move up above nine really. But then if it moves up, say it moves to 12 or 13, let's see, I make 4 grand if it moves to 12. If you look up here at the P&L at expiration, if it moves up to 13, I make 5 grand. If it moves up to 15, I make almost 8 grand. So I like SoFi going forward, but it's been tough so far. TLT and TMF bond funds were a little bit early on those, so those haven't done well. But as soon as the Fed starts to cut interest rates, those should do well. I've got poor man's covered calls, so uh, deep in the money, long term anticipation, well, securities, leaps options, and covered calls against them. Um, Ulta, that's a fairly new one that I just put on because they came out with earnings and it dropped big. Um, yeah, I just saw an article on Ulta, uh, one of the top stocks to buy after earnings now, with the big dip, and they're basically saying that the numbers are good, but their guidance. So they beat on the top and bottom lines, but guided lower. And that's kind of the game that they play. But it dropped 30%, so it dropped huge. Um, yeah, you can see it's back down to the lows, but I don't think it can go too much lower. And their profitability and numbers are excellent. So again, let's look at what it basically says. The headwind was already factored in the stock's price. It's now 30% below the March high and 20% below the analyst target. So the analysts are even saying that, hey, it's a bargain right now and it's going to continue to do well. So they, uh, they have a great online, and they've got in stores, brick and mortar all over the place. So, but their online business is great as well. Okay, we're getting to the end here. Verizon, um, 41. That just continues to do well as far as the dividend that it pays. So it pays a quarterly dividend, 6% dividend, and it's just been continuing to do well. It's pretty solid. Wow, it's down though. Oh wait, no, this is Verizon. Yeah, it's hovering around. It's trading right around 40. It's been doing that consistently. So I like Verizon. And then the last one is Exxon Mobil. Um, I rolled into July with Exxon. Get oil and gas was down, so we're at 110. We're still in that profit range, and we've done really well in Exxon. Yeah, $1,000 in the last 6 months. 366 just in the last 30 days. So let's look at what we have for earnings next week. If we go to earnings, all earnings, and then we sort by date. Uh, GameStop, the meme, I kind of stay away from that. Um, Avago, which is Broadcom, comes out next week. I think Broadcom's, yeah, it's been strong. And then Adobe, I'm kind of done playing Adobe. I've gotten hurt, so if I get hurt and I'm just not trading well, Adobe's got some competitors lower cost, so I know their Adobe Photoshop, their Adobe software is much more advanced and you can do much more with it, but it's very expensive. So they're getting hurt by some of the companies that have less expensive uh, products. Got Autodesk and Lennar Home Builder. That'll be interesting with real estate down so much. All right, guys, I've put a link down below for the free options workshop. Remember to grab that. Remember to sign up for Moomoo. Get your 1.5% cash back or free fractional shares of stock. Remember to hit like and subscribe down below. Let's get this video out to more people, and leave a comment, ask a question. I answer everyone. Thanks for watching. I'll see you in the next one.